International financial institutions like the World Bank and IMF have long been cornerstones of global economic stability. But as the world faces new challenges like climate change, the rise of China, and social inequalities, are IFIs equipped to address them?
These organizations, the IMF and the World Bank, have long prided themselves as being rule-based organizations.
The IMF we see today, which is a financial firefighter, that was not envisioned at all.
What reforms are needed to align IFIs with current global realities? How can these institutions navigate tensions between the US and China while still doing their jobs? And what role should the US play in shaping the future of these institutions?
The key challenge that both of these organizations are facing is now how to make sure that their governance reflects the evolution of the world and the world reality as they are today.
So I would like to see far more financial support, not just in the interest of the developing world, which needs financing, but in the long-term strategic US interest as well.
Joining us today is Dr. Dauda Semben and Dr. Ben Steele. Dauda Semben is the founder and CEO of AfriCatalyst, a global development advisory based in Dakar, distinguished non-resident fellow at the Center for Global Development, and former executive director of the International Monetary Fund. Ben Steele is senior fellow and director of international economics at the Council on Foreign Relations in New York. Moderating the discussion is James Upton, senior portfolio specialist and chief strategic officer on the Emerging Markets Equity Team at Morgan Stanley.
Why don't I start with Dr. Steele? And I think it would help set the tone for our participants in this webinar if you could sort of explain to the participants just how the governance of these two institutions, the World Bank and the IMF, function, and why it's in the U.S. interest for them to why it's in the U.S. interest to support these organizations. In short, why do these institutions matter?
Okay. With regard to the way the organizations are governed today, I'll defer to Dauda on that one because he's actually been in the seats. But in terms of the way the institutions were created late in World War II in 1944, it's important to recognize that they play very different roles today. The IMF, for example, was meant to ensure that some form of multilateral trading regime could be revived after World War II. And in order to do that, interestingly enough, rather than trying to start with a new trade regime, GATT didn't come until many years later, which eventually became the WTO. They decided to work on monetary issues first and ensure that countries that got into balance of payments difficulties would not, for that reason, start imposing trade barriers, that there would be some international mechanism to provide short-term support. But it's very important to recognize that the IMF we see today, which is first and foremost a financial firefighter, a crisis institution, that was not envisioned at all in 1944. In fact, both the British and the Americans, who really had warred between each other for 2 years in the run-up to the conference, very much agreed that countries that ultimately found themselves in real financial difficulty paying their bills would have to take care of it on their own, basically by devaluing their currency. So this was a time at which fixed exchange rates were the accepted norm. Fast forward to today, after the collapse of fixed exchange rates in the early 1970s, the liberalization of capital flows in the 1980s, what you found was that countries were continuously coming to the IMF for crisis support. So it is a very, very different institution today. You could say the same thing of the World Bank in 1944. The way it was envisioned at the U.S. Treasury was that it would help in the reconstruction of war-torn Europe after the Second World War. And the Latin American nations, for quite understandable reasons, objected to that. They said, why should our hard-earned dollars go to reconstructing war damage in rich states? How is this going to be used to our benefit? So the idea of giving the World Bank another mission, development was sort of tacked on quite late in the process in order to satisfy the Latin Americans. Fast forward today, and the World Bank is a major development organization, and basically nobody remembers its roots as a war reconstruction organization. The one important thing to notice about governance within the two institutions, and I'd definitely like to hear Dowda's thoughts on this in terms of how it works today, is that the United States has a quite unique role in both organizations in that it has sole veto power over major policy decisions, and it was created quite consciously in that way. If we were going to create an IMF and a World Bank today, it would be inconceivable that the United States could demand such a privilege for itself. And that naturally produces some tensions with other countries who have become very much active and necessary participants in these organizations.
So maybe I'll turn to Dr. Sembène in saying, among your many accomplishments in your career, you spent 17 years at the IMF, so you're a practitioner, participant. What are you seeing as some of the challenges today that some of the member countries are facing as a result of the competition between the U.S. and China? And we should preface it, I think we all know this just from our general reading, that when the IMF and the World Bank were founded, of course, the beginnings of the Cold War were there, with the rivalry with the Soviet Union from a geopolitical and military, or from a military perspective. But the Soviet Union was never an economic competitor of the U.S. And today we have the situation of China not only being a geopolitical and military competitor, but an aspirational economic great power, number 2 economy in the world, with aspirations to become the number 1 economy. So, of course, that has inherent conflicts. And so for Dr. Sembène, how do you see some of that rivalry or competition between the U.S. and China affecting sort of members' interests and what they'd like to see change?
Well, thank you very much, James. It's a pleasure to be with you today. Maybe before I respond to your question, I'm going to a little bit touch upon the first question you asked Ben, and which he deferred to me about how the governance of these institutions, the IMF and the World Bank, functions. First of all, what you have to know is those two organizations represent about 190 countries around the world. So it's almost virtual, sort of all the countries around the world are members of those two institutions. And in terms of how it works, you have 3 types of entities or organs within the institution. You have the board of directors, which is, of course, at the World Bank includes 25 executive directors who are representing the 190 countries. And at the IMF, you have 24 executive directors representing all those 190 countries. Basically, what should have happened is above them, there is what they call the Board of Governors, which is composed of ministers and central bank governors that actually, according to the IMF Articles of Agreement, are in charge of governing the IMF and the World Bank. But what happened, governing the IMF. But what happened is they delegate that authority to the Board of Directors that I talked about. So the second type of actors you have within those institutions is management. So the board of the IMF and the board of the World Bank are chaired by management. So at the IMF is the managing director, and at the World Bank is the president of the World Bank. So, and the third actor that you have in both organizations is what they call the staff members who are in charge of operations. So just to quickly also refer to what Ben talked about the US having a veto power. What happened is if you go to the IMF, most of the most important decisions are taken at the majority of 85%. total votes. And the US at this stage has about more than 16% of the voting power, which means, of course, that if the US doesn't agree with any major decision, of course, that decision would not be taken by the board of the directors. So maybe now to respond to your question, I think the essence is that what are those challenges that institutions like the IMF and the World Bank face today, and also how these challenges are complicated by the rivalry between the US and China. So let me, first of all, actually talk about one key challenge that both institutions are sort of facing right now. And I think it's referred to what Ben talked about earlier, is the governance system. So here you have two institutions who were created 8 years ago this year. Of course, when they were created with what was going on at that time, and also with a governance system that actually was supposed to reflect the reality of the world 80 years ago. But now, if fast forward, if you're looking at the world right now, it's totally different from what happened at that time. So I think the key challenge that both of these organizations are facing is now how to make sure that their governance reflects the evolution of the world and the world reality as they are today. So you take, for instance, the IMF. Well, the IMF has a governance system that sort of attribute voting power in relation to the economic sort of importance of the countries. So right now you're in a situation where China maybe 80 years ago was not that important, but right now is now the second world economy after the US. And unfortunately, its voting power hasn't evolved to catch up. So those are key issues that the IMF and the World Bank have to sort of struggle with. And I think the issue is, of course, this is very complicated when you have a competition between the US and China who address those issues, because of course, as you know, Congress would never, US Congress would find it very difficult, of course, to agree with reform that would favor China at this stage. That's one. Another key challenge that these two institutions are facing is how to revisit their business models. So you have a business model, of course, that date back many decades ago, and now that's maybe are not necessarily sort of in line with expectations from some members. So you take many developing countries, they would tell you that the World Bank and the IMF has very limited risk tolerance. So when they lend to those countries, they actually add a number of safeguards. And one of the key safeguards is what is called the conditionality. It's, of course, when the IMF and the World Bank provide resources to those countries, they tell them, well, you will get part of these resources only if you implement or this type of policies or this type of actions. So those sometimes are found to be very intrusive by some of those recipients or borrowers. So I think this is something that, of course, reflect the fact that they needs to be looked at and, of course, adapted. One other issue is when those organizations were created, you take the World Bank, for instance, the mandate was to help address and reduce poverty, and also, of course, sort of address inequality. But right now, the membership of the World Bank has found that it is important also that the World Banks looked at issues about the delivery of global public goods, which means that they will need to adapt and update the mandate of the World Bank to reflect that type of expectation. So that's another issue also that is faced. So maybe not to be too long, I think one other critical challenge that both the IMF and the World Bank are facing is what is called voice and representation. So you take the example of Africa. So I told you, for instance, that the IMF has 24 executive directors and the World Bank 25. At the IMF, out of those 24 executive directors, only 2 are from Sub-Saharan Africa. So those 2 represent a combined of 46 countries, so each of them representing 23. I was one of them. When I used to be at the IMF Executive Board, I was representing 23 of those countries. So you compare that with a number of other executive directors that are representing only one country. So of course, the one representing the US is only looking after the US. The one representing Germany is only looking after Germany. Even China, the one looking at China is only representing China. same with Saudi Arabia, same with France, same with the UK. So what I'm saying here is, I think many countries, and it's not only in Africa, but also in the Middle East or also in Latin America, feel like there is a need to make sure that that issue is also addressed, so that the board is representing more. Of course, it's sort of they have more seat at the board. Right now, the IMF is looking at the ways to add a third seat for sub-Saharan African countries, which the World Bank already did years ago. So finally, I think what I would add to what I just said is what really make it, and I think I say that at the US Congress when I was testifying, is that I think this competition between US and China is, of course, likely to complicate these challenges that I just talked about, how to reform the governance, how to make sure that there is better sort of business model, etc. And because it undermines the legitimacy and, of course, the effectiveness of these institutions as perceived from developing countries, but it also has the potential to paralyze their operations and their decision making. So I think this is the reason why it needs to hopefully to be as constructive as it is possible to help avoid this or address these challenges.
Are you ready to join the global conversation? Network 2020 bridges the gap between the private sector and foreign policy. Join our community to exchange ideas, foster people-to-people connections, and promote global citizenship. Become a member today to shape the future of international relations and make a global impact. Click on the link in the description to learn more.
And maybe, Dr. Steele, if you could build on that a bit with that core idea of what does the U.S. do when, in fact, China is... Some of these reforms would give China more power within an institution, within both institutions at a time when, as we know, it's a bipartisan popular thing to do to challenge China at every level, let alone trade issues, but in almost every other sphere.
Well, the last major episode of governance reform at the two institutions came during the Obama administration, when it was proposed to have new voting weights, which would have left in place the U.S. veto power and sole veto power, basically would have given China in particular more say, but mainly at the expense of the old European powers. So the United States, looking at this from a rational, realist, selfish perspective, should have, in my view, should have embraced this immediately. It was no threat whatsoever to the dominant U.S. voice at the two institutions. Instead, Congress sat on it for years. And this had, in my view, and I'd definitely like to hear Dauda's view on this, gave China the opportunity to go around the world and say, look, we tried to be reasonable with these people, but they're not reasonable. That's why we need to set up new institutions that, for example, can contribute to infrastructure development in Asia. And so two initiatives I'd like to discuss coming from China. One, a multilateral institution, the AIIB, the Asian Infrastructure Investment Bank. I would argue that they would not have gotten nearly as much Western support as they did had Congress embraced that governance reform early on. I should emphasize that eventually it was pushed through, owing to the efforts of Paul Ryan in Congress. I give him a lot of credit for that, but it was too little too late, in my view. There was a lot of concern expressed at the time that AIIB would be used to pursue Chinese objectives and not broad world development direct objectives. It's probably too early to have a serious evaluation, but there are signs of that I consider concerning. Dowda probably remembers last year, the Canadian Director General in charge of global communications at AIIB resigned, accusing China of allowing the organization to be dominated by quote unquote Communist Party hacks. And Canada thereafter ceased all cooperation with AIIB. But of far more concern in the United States has been China's massive unilateral Belt and Road lending initiative, in which China has become by far the world's dominant creditor for development financing, hundreds and hundreds of billions of dollars dedicated to building infrastructure, mostly in the developing world, but infrastructure that's of key interest to China. I don't want to, dominate the discussion on this, but let me just give you one example of the sort of concerns that have come out of this. The Belt and Road Initiative financed a large port development in Sri Lanka. That port was not financially successful. Sri Lanka was unable to repay back the loan. And under the terms of the loan, China took over the port under a 99-year lease. And naturally, this led to charges from all over the world, particularly from the United States, and China was engaged in debt diplomacy and was in effect participating in a new form of colonialism. This initially sparked a reaction in the United States that was emphasizing the need for the U.S. to do the same thing that China was doing. We needed our own Belt and Road. I thought that was a terrible idea at the time. I think we do need to emphasize the traditional multilateral development model that the World Bank has pursued. And I would emphasize that it is in the U.S. interest to pursue these initiatives through the World Bank. First and foremost, as we've already discussed, the United States has unique power within the World Bank, having sole veto power, meaning no serious project can go forward without U.S. support. And furthermore, even though the United States is the most important single creditor at the United States, most of the financing is coming from the rest of the world. So basically, the United States is in this very privileged position of being able to finance its own priorities with the support of others, with something, a privilege we would not have, obviously, if we would engaging in these initiatives unilaterally. So I would like to see far more financial support for the World Bank. Again, not just in the interest of the developing world, which needs financing, but in the long-term strategic U.S. interest as well.
And maybe, Dr. Simban, you could build on that with some specific examples of like what we've seen go on in the ground on countries within the African continent, where arguably one could argue the challenge of China becoming a more significant creditor has potentially spawned the U.S. and the West to do more, right? I mean, a lot of these countries, when the World Bank and IMF were founded, a lot of the countries in Africa were still colonies of European powers. So now they're, and have been for many, many decades, established countries, but there's been a need for infrastructure development. There's been a need for projects. There's been a need for lending. And one could argue, to flip it on its head, that China's aggression in that regard with Belt and Road has actually, sort of spawned the rest of the world, U.S. and West, to say, oh, well, maybe we need to do more. So could you talk, Dr. Simban, about the experience of some member countries and participants in what they've experienced with China as a creditor? Because I think we've all read that some of the lending is usurious or predatory, as you point out with the Sri Lanka port, assets can be seized. And I think the other issue where, every country in the world wants to see employment levels increase, China often has the practice of bringing in its own workers for infrastructure projects. Could you talk about the experience of some of the specific countries and members?
Yeah, definitely, James. I fully agree with what Ben was saying. I think what also is happening, and before I respond to your question, is that I think by the US, of course, blocking this type of governance reforms or not agreeing to it at the least, what is happening is, of course, it's damaging also the credibility of the organization, because this organization, the IMF and the World Bank, have long prided themselves as being rule-based organization, which means that these are concrete formula that they had for defining the voting power of countries. And suddenly those formula are not necessarily, of course, applied anymore. And of course, in the developing world, this, of course, sort of damages the credibility of those organizations. And that's why I was saying about the effectiveness. But now to respond to your question, I think what a lot of countries, or particularly in Africa, of course, would really tell you is, yeah, there is a lot of criticism about China going into Africa, into other developing countries like Sri Lanka, as Ben was saying, and sort of funding some sort of infrastructure there. From the perspective of many countries in the developing world, this is very much welcome, because for them, I think what has happened is China has filled a gap that many advanced economies were not filling when they needed it the most. And many, the World Bank and the IMF didn't also fill when they needed. So as you know, for the past several years, there has been a marked drop in the official development assistance for countries in Africa and other part of the world. And at the same time, we have seen, of course, an important sort of demand or social demand for across all of those countries for infrastructure development, for social spending, and etc. Unfortunately, those countries did not feel like they were able to get enough from either their traditional partners, whether it's the US or some other European countries, or from the market. Whenever the African countries were to go to the global market, to the Eurobond market, they would be paying maybe, I think, on average 700 or 800 basis points more than the risk-free interest rate that is the US Treasury bill. So under those circumstances, when China came, I think many countries felt like this was really sort of very much welcome, especially the Belt and Road initiatives. And of course, people also welcomed the fact that it led not only the US, but many other, the G7, to come up with some sort of new initiative. So I think you all know that the Partnership for Global Infrastructure and Investment is sort of a response by the G7 to the Belt and Road initiative. From the perspective of developing countries, this is much welcome, because at the end of the day, the way I think many of these officials in those countries see it is, they have so much sort of needs. If you take a country, for instance, if you take Africa, for instance, it is estimated that they would need at least $2 trillion in terms of just to be able to meet the climate finance need that they have by 2030. So under those circumstances, I think having more sort of partners coming and chipping in, whether there is China or the US or European countries, is much welcome. There is some room for working together and making sure that they help address the needs that those countries have. But I think something important, and it is in relation to the IMF and the World Bank, is there has been a perceived failure by the World Bank, particularly to really come up with the financing that those countries needed to invest in infrastructure. The World Bank a little bit backtracked when it came to sort of financing infrastructure in many countries. And of course, since those countries, many of them didn't have access to the private capital market, they didn't have any other sort of alternative but to go to China. Now the question is this: there is a lot of criticism about China. When I was at the Congress, I think there was certainly bipartisan criticism of China's involvement in many developing countries, particularly in Africa. Some of this criticism is much justified, of course, because there are some Chinese entity, particularly some private Chinese entity, that would lend, at market condition, or sometimes even actually, more unfavorable conditions. But you should not also, and I think that's the perspective that many developing countries do have, is China also has a lot of good things. First of all, they do provide cheap lending particularly some public entities. They provide concessional funding, just like at the World Bank. Some others also, they may be, of course, helping with white elephants, but there are also a lot of good infrastructure and concrete infrastructure that have an impact on growth in many developing countries that China, of course, has helped build. I think this is something that also needs to be kept in mind. I can give you my own example. I'm from Senegal, and I live about 50 miles away from downtown where I work. It used to be that to drive from my home to downtown, it would take you at least 3 hours. Well, what happened is with the help of China, there has been, and not only China only, but also with France, there has been a new toll road that has been constructed. Now it takes me only half of this time to get to work. So what I'm saying is not everything is bad about China, and that's how people, of course, see it. That's how officials in Africa and elsewhere also see it. I think the question is more how really all the partners, whether it's traditional or non-traditional, could get together, especially at the IMF and the World Bank, to make sure that at least they can support the members, the developing members, in the best of their ability. And I believe, and I repeat it, this is something that I said at Congress. I think constructive engagement, at least within the BWIs, the Bretton Woods institution, between the US and China would certainly very much help those developing countries meet their needs. And I believe this is something that hopefully will be heard going forward.
Dr. Steele, do you want to add anything to that, or?
I would just briefly piggyback on what Dauda was mentioning in terms of climate financing. The whole world has an enormous incentive to make sure that development in emerging markets is done in a climate-friendly way. And so the World Bank, I think, plays a critical role now in ensuring that development financing in the emerging world is done in a way that does not contribute to climate change. And we should not expect that to be a Chinese priority, but it should be a priority for the entire globe, and the World Bank in particular should reflect that.
And maybe I found it interesting to see that lately we have, over the years, and I worked very closely with Latin America as a strategist for many, many years, and spent a lot of time in the countries. As we know, you have countries like Argentina that are sort of perpetually troubled and going to the IMF, and you can, the opposition party, the Peronistas, can launch a massive demonstration against IMF sort of impositions. And yet today, you're seeing a very interesting phenomenon. I asked this of both of you, phenomenon going on where countries like Argentina, Egypt, Kenya, Nigeria, even Turkey, who would have thought Erdogan would be doing this, but suddenly countries, because of market forces requiring it, because they want to see investment in their countries and they want to revive growth in their economies, they're actually following the old Washington consensus, the old traditional IMF standards of trying to have a more balanced fiscal budget, letting your currency float, even if that means devaluing, paying attention to debt issues. How much of this is just the sort of marketplace at work and people realizing there's competition to attract capital to your country, whether it's in equities or fixed income or whatever form, direct investment? And how much is maybe that we're realizing, well, in fact, the IMF has had good advice on these issues, on these sort of, economic practices? I throw that out to you both.
Yeah, no, I think, what it says is that countries in the developing world are very much willing to make the sort of extra efforts to meet their development needs, to attract investors from richer countries. So basically, when you look at it and you look at some IMF report, you will see that most of these countries have very much tried over the past several years to reform their way out of sort of poverty. And they have been, at the time, the World Bank used to have the doing business indicators. And basically, whenever every year there was some ranking of the best performers, there was a lot of African countries and also developing countries. So what it shows is there is really an appetite for sort of doing the right reform. Some of them was, of course, in line with the Washington consensus, although it's not everything. But at the same time, I think what you have seen now is they are very much trying to take, of course, the lead when it comes to the debate over what should be the reform of the global international sort of economic system. So look at this. When, for instance, the IMF and the World Bank were created back in 1944, there were only 3 African countries that were among the founding members. So it was Ethiopia, Egypt, and South Africa. The rest of the countries right now, those two organizations have among their members all African countries, all the 54 countries. All of those countries actually joined after they became independent in the late 50s and early 60s. So what it says is, since then, we have seen those countries actually sort of growing, although they are still facing with a lot of challenges. You can see that for the past Africa now is, if you take Africa collectively, the 54 countries, and if they worked one country, they would be maybe about the 7th or 8th largest economy. What it tells you, because right now Africa last year was a $3 trillion economy, and now it is estimated that in the next 5 years it will be a $4 trillion economy. What it says is, as the continent gain sort of economic sort of power, they also expect to be also more present in the decision making in the world. So I think that's why it was very much welcome that the G20 decided to allocate a seat at the African Union, and I think that's something that certainly very much is much welcome, and that's also show how African countries and developing countries in general are very much willing to change actually the way the global economic system is working, because some of them feel like it is leaving them behind. And I think if you take also outside Africa, most emerging market, starting with the BRICS, also have this feeling that they also needs to be on the at the decision table, given the fact that they have really gained economic importance over the past several years. So I think these are issues that needs to be taken into account, so that and take the most out of it to make sure that these institutions, the IMF and the World Bank, are really reformed in a timely manner, so countries do not have to go and look for alternative alternatives. These institutions, if they are very much well used, they can very much do a good job at making sure that really they support the global economic system, they support multilateralism, but they should do it in a way that really is considered to be fair, a sort of a representative and inclusive governance system. Otherwise, I think countries are, as Ben was saying earlier, are going to look for alternatives like the AIIB and other organizations that were set up recently.
Dr. Steele, could you build on that a little bit?
Yeah, if I could unfairly use my time to put 2 questions back to Dauda, from putting yourself back on your old perch at the IMF, how you deal with 2 particular problems that recur. Take a country like Argentina. Argentina's debt to the IMF is now $43 billion. It's difficult to imagine that's ever going to be repaid. Since the IMF operates as a bank and it needs to get its money back, naturally it imposes conditionality on its loans. But that conditionality, the policies behind the conditionality, make those governments unpopular in those countries. They eventually fall. A new government emerges, comes back to Washington and says, well, you shouldn't have loaned money to those corrupt idiots. They didn't know what they were doing. They were never going to follow through. Now you have to lend us money to clean up all the problems that you and those corrupt idiots created. How do you get out of that cycle? Second, with regard to China, Pakistan. Pakistan has a huge debt now, and of course has been coming to the IMF for help. And there must be enormous frustration within the IMF because the member states say, well, you borrow tens of billions of dollars from China, okay, and you can't pay back that debt. You need to deal with your primary creditor, that is China. It's you and China who created this problem. You shouldn't be coming to us before you and China clean that up. How does that triangular conflict ultimately resolve itself?
Well, it's a extremely tricky question because I think you're right in the sense that the IMF has a pool of resources that is available to all of its members. So whenever a member is in need, it is the sort of the obligation or the IMF that should be coming as lenders of last resort. So of course it has to be. It has to provide the resources that it gets in a way that does not necessarily, of course, create some sort of issues in terms of repayment and others. So, but you have to distinguish two types of resources that the IMF has. So you have those non-concessional resources that are like the lending that the IMF can do without subsidizing, and so at rates that are sort of high enough for the IMF not to be sort of not to lose its money. From the other type of resources, which is the subsidized lending that the IMF gives to poor countries or developing countries. I think in the second part, the type of the subsidized resources that we are talking about, there is a case, of course, for having some limits because those are scarce resources, although people would tell you that you should be able also to find enough subsidy resources to really grow the pie of concessional funding. But in any case, I think it really makes sense that you have to have some limits to accessing those type of cheap lending because the IMF doesn't have many of it. But I think for the other type, maybe I think the question should be how to make sure that the IMF has a lending power, that is very much enough to help those countries that need it whenever they need it. So now to come back to those countries that you talked about, whether it's Argentina or Pakistan, my sense is the IMF, of course, should continue to have to implement the policies that they have. The IMF has very stringent sort of policies that it's subject to any type of a member or country that wants to borrow money from the IMF. First of all, you have to have what is called, your debt has to be sustainable. So there is a framework that the IMF also, of course, sort of apply to countries that borrow to make sure that they can repay and that their debt is sustainable. But on the other hand, also they should be able to repay actually whatever they borrow from the IMF. Those framework needs to be implemented in a full manner, in a way that does not actually sort of jeopardize IMF resources. And I think that this is not the big issue that many countries, I mean, if you're not talking about the Argentina or Pakistan, many developing countries are in a situation where they can easily repay if they borrow from the IMF or from the World Bank, but they unfortunately do not get enough resources from those institutions. Why? Because if you take an organization like the IMF, one key issue is it usually lends to any country in proportion of the quota that the country has, which means that if you were a small developing countries in Africa with a quota of less than $4 million, well, the IMF would tell you that the limit that you can get, let's assume, is 200% of your quota. Well, you can only borrow for 8 million. I'm just making up some numbers here, but that's how it works. It's like there is a business model that sort of tie IMF lending to the quota of the countries that actually benefit from it. And of course, it might favor countries with a big quota, but unfortunately, countries that have low quota may find it very difficult to get enough resources from the IMF or from the World Bank. And when this happens, unfortunately, they tend to go and look for alternatives. And unfortunately, those alternatives are not always the best. So the question should be how to make sure, first of all, that the IMF and the World Bank have enough resources, using actually even sometimes internal resources, but also reducing their very high degree of risk tolerance. I think if we do that, and second, we make sure that they really actually face limited pressure and interference when they are lending in countries like high-profile countries, because at the end of the day, when the IMF decide to lend, it's the board of the IMF that decide that this is good to lend. So the board of the IMF is all the membership, is all the 190 countries that make that common decision to say, well, let's lend to the Argentina, because what Argentina is showing and bringing on the table is reassuring. Let's lend to Pakistan. So what I'm saying there is not something that really the countries, the borrowing countries have to be blamed, but also you have to look at who is making the decision at the board of the IMF. Well, that's usually a consensual decision that requires at least the majority of votes. So I think that's a whole thing that we need to look at, and not maybe try to see whether those countries that are borrowing are at fault or the IMF at fault. But maybe if we reform the IMF the way many countries are putting it on the table, and the G20 itself also talking about those reform of the MDBs like the World Bank and the IMF, I think if we do so, maybe we will be in a better shape.
Well, on those constructive comments, I want to thank you both for stimulating conversation. As I said at the beginning, I feel that we could use a second hour. I hope we might dedicate some time to a book discussion and an article discussion, because you've both written so much.
Thank you for joining us on this episode of Global Insights. Voiceover host and editor for this episode is Casey Craig, with production and support from Brian Thong. You can subscribe to Global Insights on Apple Podcasts, Spotify, or wherever you get your audio. For more analysis, events, and ways to connect with our community, click on the link in the description. See you next time.